Hello, hello, hello. What's going on, everybody? Welcome to a Capital Hungry Monday market analysis webinar. How is everybody doing today? We probably don't have too many people in the YouTube audience as it's a live stream, but can we get an audio and visual check before I start? And I'm going to jump straight into the sauce, straight into the content as we look at economic events, investor behavior and market sentiment, and do analysis fundamentally and technically on gold, GBPJPY, GBPUSD, EURUSD, USDCAD, US30, as well as looking at obviously dollar movement, Japanese yen movement, and so forth. Okay, so to start off here, we're going to start off by looking at investor behavior and market sentiment, which tells us a lot about the overall order flow and how money is moving through the entirety of the financial markets and why. So with some key recent fundamental points, you're going to understand that we don't have any crazy fear, uncertainty, or doubt within the markets. And this is keeping markets fairly optimistic on the support of the central banks for their respected countries' economies. We got confirmations from Jerome Powell at the Jackson Hole Symposium that tapering of stimulus will be delayed and they're going to keep the economies in an accommodative state until they reach maximum employment. We also saw last week on Friday that non-farm payrolls was very poor data, showing us a decline within the economic rebound in the US labor market. All of these have an optimistic impact on the financial markets, meaning equity markets and global stock markets are bullish, as well as the Japanese yen by itself, the US dollar by itself, which are safe haven currencies, are bearish, and the volatility index is also bearish. We can see the flow of market sentiment, we can see the impact of market sentiment with the flow of liquidity through our financial markets, as we can verify across various regions from the United States to Australia, UK, Eurozone, Japan, that stock markets are still continuing bullish, riding the support of the central banks and continued injections into the money markets. We can also identify this with the volatility index being bearish, which is showing us the inverse information of the S&P 500 index, the Japanese yen being bearish on the intraday and higher time frames, as well as the US dollar, the world's reserve currency, also being bearish. We had worsening manufacturing PMI as well as jobs data, which also led to more bearish downside moves on the dollar, as it shows us and shows investors from the signals given by the central bank, aka the Federal Reserve, that the tapering process will be delayed. So, to summarize, just based on market sentiment, investor behavior, and what was said in the previous market update and trade ideas webinar, we are continuing to look to play weakness in the Japanese yen, weakness in the US dollar, as our safe haven currencies are seeing an outflow of liquidity and we're seeing an inflow of liquidity in the equity markets. So primarily on GBPJPY, GBPUSD, and EURUSD, as well as the US stock market US30, I am still in a bullish bias. We are just going to be zooming in to the technicals, price action, market structure, as well as fundamentals to look for entry points on buys for GJ, buys for GBPUSD, buys for EURUSD, buys on the US30 stock market, sells on USDCAD, which is the inverse, and of course continued buy bias on gold, which I'll list out the individual fundamental factors of why gold is more bullish. Before we jump into that, as we're going to be mapping out intraday trade ideas and day trade ideas, we want to understand what economic events we have overnight and to come. We don't have too much that's going to be impacting the US dollar, but we do have a flurry this week of central bank positioning sentiments and policy statements from Australia, Reserve Bank of Australia, Bank of Canada, and the European Central Bank. Overnight tonight, at 12:30 a.m. Eastern, we have Australia's interest rate decision and the Reserve Bank of Australia rate statement. at 5 a.m. Eastern over our London trading session going into Asian session close, we have Germany's ZEW economic sentiment, which will be impacting euro pairs. And then also at 7:50 p.m. Eastern the following day during Asian session, we have Japan's GDP quarterly figures, which will be impacting the Japanese yen. You want to make sure you understand as a manual retail day trader what economic events are active or going to be active that'll be impacting pairs you're trading, as well as fundamental points that are active. So we've already gone through the main fundamental points to focus on, as well as the economic events that are in play and to focus on overnight in the coming sessions. We understand we're seeing an outflow of liquidity in the US dollar and bearish structure on the dollar, an outflow of liquidity in the Japanese yen, and overall bearish structure on the yen, the volatility index being bearish, and global equities being extremely bullish. So with the support of the Federal Reserve and continued support of the US economy, keeping it in an accommodative state, these are all fundamental bullish factors for gold. Here we have gold on the daily chart, where this 1680 price point is a key higher time frame demand area. You can see from this area we had a very strong rejection and bullish market structure developed since, coming into this higher time frame price sensitivity area around the 1830s with a peaked high. But we have tons of fundamental bullish factors for gold still in play, and I'm going to list those out now. Number one, delay of tapering. Delaying of tapering and not following through with the tapering process shows us that stimulus is still going to stay active and the US dollar money supply will still continue to increase, meaning the US dollar will be oversupplied. This means that inflation is still going to keep steadily increasing within the US economy. Investors hedge inflation risks by pooling money into commodities or precious metals such as gold, which is a safe haven. So number one, interest rates remaining low is a bullish fundamental factor for gold. Number two, the delaying of tapering and inflation rising is a bullish fundamental factor for gold. Number three, the poor U.S. economic data, which we saw last week with the NFP jobs report, was also very bad data, and this is a bullish fundamental factor for gold. So you can see we respected this higher time frame demand area technically and had buyers load up their orders from this 1680 1700 price point and have fully corrected this impulsive downside move coming to this price sensitivity area. Obviously, once we clear above these price sensitivity area highs and continue to maintain the bullish market structure, we have a lot of potential to keep chugging away up into the 1840s and 1860s. When we're further zooming into the price action and on the daily time frame here on gold, you can also see we see much larger and consecutive bullish candles showing strong buyers momentum and price action, with just minor bearish pullbacks or consolidation zones that do not break overall market structure as we continue up in this trend. So for those fundamental reasons listed, as well as weakness in the US dollar, I am in a bullish bias on gold. Now, when we zoom out and look at gold on the intraday time frames, you can see some very beautiful bullish market structure. And we're going to keep things very simple. All you see is upside moves, consolidation phases, breakouts to new highs, pullbacks, breakouts, and continuations, maintaining that overall bullish market structure and buyers momentum, right? You can see our historical key levels are being used as entry points for buyers to enter back into the market after having these pullback phases and dips. We are in a very similar stage to where we were here, where you had a high printed by buyers, buyers take profit and sellers jump in hand, you create this pullback structure, you come back to a demanded price point in retesting bullish market structure, and then we extend back up into those highs and potentially higher. At these highs, instead of having a pullback phase, we had a liquidity zone created and orders generated in this fashion. Remember, when you're identifying technicals and market structure, keep it very simple. The market can only move up in two fashions. You're either going to have your impulsive move, a high printed, a pullback which gets created by profit taking by buyers in that high, and then sellers jumping in to relieve them, and then continuations to the upside, or consolidation zones and continuations to the upside. Now when we look at gold here, our higher time frame bias is still bullish, even above 1812 or above these candle body medium term zones. I would still be bullish. But what we have to identify is that now from these high points at around 1830, we are in some pullback structure, which is perfectly fine. So now what I'm essentially looking for is if we can come down to 1820, even to 1815, I'm still looking for buys at the green boxes and then scaling above accordingly above 1828 and the previous highs to take further buys to the upside. Even if we came down to 1812 and did a deeper pullback, I would still be looking for buys in that area. I personally like to play with the fundamentals, like to play with the sentiment, and like to play with the market structure and trend. Even though you have these pullback phases that can run hundreds of pips, it doesn't break the overall trend, and it's much easier to play the impulsive moves once the buyers jump back into the market, and you can see how we keep extending into those previous highs and new intraday highs. So to summarize, as long as the US dollar stays bearish, US inflation continues to increase, we don't see a rebounding in US jobs data to maximum employment, tapering is delayed by the Federal Reserve, and we maintain this bullish market structure, I am still in a buyer bias on gold, with the green boxes being entry areas at the key levels following this pathway of price, with the safest buys being above 1836 previous highs. I would only be looking for sells on gold and shifting into a bearish bias if we were to technically break below 1803 and also get the inverse of the fundamental confirms I was just telling you here, where instead of having the tapering delay, we get extremely strong US data. We get tapering confirms. We get interest rate increase rumors. We get the demand for gold as a precious metal safe haven to drop, and the reverse movement on market sentiment. We do not have any of those factors yet to see this downside move, so I'm going to be sticking to play with the trend in the bullish market structure and bias labeled there on gold. Okay? GBPJPY. Like we just looked at, GBPJPY since the pandemic crash has only been bullish, minus pullback phases and continuations to the upside. We can see investor confidence within the UK economic growth and overall UK economy is still strong. When you look at the UK stock market, UK 100, FTSE 100 still extremely bullish, and when you zoom out and look at the Japanese yen, it's still very bearish. So you can see the majority of our risk currency against safe haven pairs, whether it be GBPJPY, GBPUSD, EURUSD, EUROJPY, have all been maintaining bullish market structure. Now, on the higher time frames, you can see that this is the last price sensitivity area that's maintaining bullish market structure from a macro perspective. All you've seen is upside move, pullbacks, continuations to the upside, and bullish market structure to keep it very simple, right? Yes, you have some consolidation phases. Yes, this pullback we've seen from these highs was much more aggressive, but it made sense as we were entering a new quarterly period. But the first thing we want to identify is this downside pullback move. Where is it coming from? Well, it's coming from new highs being printed by buyers. The second thing you want to identify is this pullback structure breaking overall bullish market structure? No, because the last price point to hold bullish market structure is this demand area at around 148.5, 149. The second thing now you want to identify fundamentally is that the Japanese yen is still bearish, as well as the UK stock market is still bullish, and we actually had some stronger PMI data from the UK side. Now when we look at the price action as well, we have to be a bit iffy as we're coming into this wedge pattern and potential technical squeeze. But this price action on the daily time frame is very beautiful. We have very strong bullish engulfing candles, consecutive bullish candles, minor bearish pullbacks or blips, but continued extension into intraday highs, making our way to the upside. Obviously, if we can break above 152.5, we have a lot of space to fill this range back up to these intraday price points around 153.5, as long as we maintain bullish market structure. So fundamentally and technically, the higher time frames, I'm still in a bullish bias on GJ. Now let's zoom into the intraday time frames. Alongside some of the intraday bullish market structure, as well as our psychological price levels, you can see great respect to this bullish intraday structure. Upside move, pullbacks, continuations to the upside, consolidation zone, breakouts, and now we are just in a intraday consolidation zone, but still maintaining bullish market structure, still having buyers print those intraday highs, not breaking previous price sensitivity areas. Remember, this trend line that I drew here, just because we're breaking the trend line does not mean we're breaking bullish market structure. Market structure is defined by price points. For example, for us to break intraday bullish market structure, we would have to have GJ come below 151.5. The reason for that is that this is the last price point on the intraday time frames where you had an intraday high printed, a pullback, and we extended into these intraday highs, right? So right now, we can't just say, oh, this is a resistance forming, time to sell GJ. No, it's just a consolidation phase. You don't want to start calling every consolidation phase a resistance and then you break to the upside and continue up with the trend. So fundamentally and technically, I'm still bullish on GJ, and these are the price points of interest I'm looking for buys. If we get a double bottom pullback to 151.8, even to 151.5 deeper pullback for the lower weekly wick, I'm still looking for buys, which I'm going to mark out in the green box areas for either scalp or intraday trades. Now, these pullbacks and entries are going to be based on price action. We can come to 151.8, but we might break a bit lower and have a liquidity grab. So you don't want to start rushing the buys. You still want to wait for your technical confirms of a support being created, a double bottom, an order block failing to break below those areas. So as long as UK equity markets continue bullish, we don't have any fear, uncertainty, or doubt to impact the UK investor sentiment, which is very confident, and the economic rebound. And we're seeing, obviously, the stock market very strong. As long as Japanese yen remains bearish and we follow these price points of interest, I'm looking for buys at the green boxes. Safest buys being above 152.2 as well as 152.500 psychological price level. I would only be looking for safe sells on GJ below this liquidity zone, breaking bullish structure with UK equities being weak, fear, uncertainty, and doubt, as well as Japanese yen strength. We do not have any of these confirms yet, but I still like to map out both sides of the coin. But again, my main bias on gold is buys, GJ is buys, GBPUSD is buys, EURUSD buys, USDCAD sells because it's the inverse. You have your safe haven currency against the risk currency, where this is obviously the other way around, and US30 buys. Okay, so again, to recap, you can always rewatch this webinar. So far, trade ideas have been given on gold as well as GBPJPY. Okay, now you're going to see that GBPUSD is very similar, higher time frame. This is the daily chart on GBPUSD. Very similar structure to GU, not exactly the same. You can see this area was the last highs printed by buyers, right? from this area, we had some profit-taking moves in an aggressive pullback phase that took us all the way back down to this higher time frame demanded price point at roughly 1.36, 1.365. We're similar to GJ. We still have failed to break below this price point, maintaining bullish market structure. Right? It's similar to like when you have these demand zones created here and you can get some aggressive pullbacks, but as long as you don't break those price points, you're still bullish regardless if you break a little trend line you may draw. Market structure is based on price points. Okay, remember that, okay? Now, higher time frame structure is still valid, and we understand that again, UK equity markets are still bullish, showing us confidence in the UK equity markets. And on this side of the coin, the US dollar, which we're trading GBP against the US dollar, is still bearish fundamentally and technically, and having some stronger bearish moves as well. Dollar has a lot of potential just to do a bit of a pullback and come back down to revisit these lows and dig even deeper, with the market optimism staying active as the Federal Reserve is going to keep the US economy in an accommodative state and delay tapering. Okay? So now let's zoom in a bit more. On the daily time frame, from this technical double bottom and higher time frame demand area, very strong stretch of bullish price action, correcting this downside move. Stronger bullish candles, minor bearish pullbacks that don't engulf or break structure, and continuations to the upside here on maintaining that intraday bullish market structure. Now, this is just the 4-hour time frame identifying some structural points. We can see here maintaining that higher time frame demand zone and now starting to create some intraday higher highs where we're continuously printing these higher highs and not breaking the bullish market structure. Even if we were to break this visual trend line here, bullish market structure would still be intact all the way above 1.379 here, above these last previous intraday highs. But you can see from this high printed, we're in a pullback phase like we've seen many times before, right? Now, GBPUSD, if we get a deeper pullback to 1.379, still bullish bias. If we break and retest above this gray medium term zone at 1.383, bulls and buys, and breaks above 1.39 buys, looking to target 1.4 flat. As long as UK equity markets continue bullish, we maintain this bullish price action and market structure. The green boxes are buy entry areas, especially if the US dollar continues bearish. And we know that regardless what pair the US dollar is in, because it's the world's reserve currency and the business currency, it always holds more strength and power. We're going to notice this when we move on to EURUSD, as well when we look at the inverse market structure and price action on USDCAD, where the US dollar is the primary in that pair. I would only be looking for sells on GBPUSD if we broke below 1.374, have US dollar strength, and any fundamental fear in the markets that's actually being digested by investors and smart money, which we haven't seen. We identified that with our market sentiment and investor behavior analysis when we're looking at the structure and movement on the equity markets being bullish, as well as our individual safe haven currencies being bearish, and no mass fear being processed by investors. For example, we have some noise with Middle Eastern tensions, but nothing that's impacting financial markets yet until it leads to further conflict. We have some noise regarding the new MU COVID variant, and as well as Delta variant cases rising, but it's not leading to financial market impact yet because there's no further lockdowns. For the time being, those headlines are just noise. They're not bringing any impact to the financial market yet, so we're going to continue to play that optimistic sentiment and stance as described. Okay, everybody. Next, EURUSD, this is the daily chart. Does it not, even though this is a different primary and still against the US dollar, look at the overall market structure since the pandemic crash. All right, we have this higher time frame demand area from the pandemic crash, and all you've seen is upside move, pullbacks, consolidation zone, breakouts, pullbacks, and potential continuations to the highs as bullish market structure and price action from a macro perspective is still being respected. The last price sensitivity area that took us into these highs on Euro USD, even like for example, a lot of people might draw a trend line like this and say, gee, trend is breaking here, we're going bearish. No, the last price sensitivity area that took us into these highs was from these double bottom lows. And guess what? Around 1.7 flat, similar to GJ, similar to GBPUSD, we still have failed to break here since September. Even with this deeper pullback we had from these highs again, it still came to this exact same demanded price point from an institutional perspective and having a very aggressive bounce, as look at what we have as a similar pattern. German equity markets and overall Euro stock markets bullish at all-time highs. US dollar, world reserve currency, bearish, right? Now let's zoom in more. We've had a full correction of this downside move and very strong bullish price action in intraday structure developing. Stronger bullish candles here, minor bearish pullbacks, and only continuations to the upside. So higher time frames bullish, fundamentally bullish. Now we just need to narrow down some entry points. Well, look at this. Beautiful intraday market structure being created here. Highs being printed in this channel that's pretty much developing. Only having these pullback phases when these intraday highs are printed. Buyers jumping in from better demanded price points and continuing right back up into the highs. So, Euro USD buy areas. I'm going to put this, let's just move this to these candle bodies because it's going to be a buy area as well. So from this higher time frame zone, we're having a bit of a pullback phase, which is understandable. If we were to come back down to around 1.685, 1.686, I would still be looking for buys in these areas. Then scaling above 1.9 accordingly in this fashion. Even if we start to create a support around 1.86 in this area, I would be looking for buys. This is the pathway of price as long as the central banks continues their accommodative stance. One thing we will have to keep in mind, obviously, with our euro pair is that overnight we have the Germany ZEW economic sentiment data, which is going to have a direct impact on euro pairs. That's at 5 a.m. Eastern during London session going into Asian session close. And we have the European Central Bank policy statement, interest rate decision, obviously midweek. It looks like majority of central banks are going to continue to use the new COVID variants as risks to the economy and continue to keep the economy in accommodative states and keep stimulus active. So as long as UK, Euro, US, and global equity markets continue bullish, dollars bearish, this is my main bias with the green boxes being buy entry points. I would only be looking for sells on Euro USD if we come back below these price sensitivity areas and higher time frame key level 1.84 and can identify any US dollar strength. I like to map out both sides of the coin just in case we do get some fear, uncertainty, or doubt, and we do get US dollar strength for whatever fundamental reason, as we have some more jobs reports this week, jobless claims later in the week, as well as JOLTS jobs opening. We have to be able to adapt to either side of the coin. But my main bias on gold, GJ, GU, Euro USD is still buys for those fundamental and technical reasons given from higher time frames to intraday time frames. Now, we're about to move on and give some analysis on USD CAD. You're going to notice that USD CAD is the inverse of Euro USD, GBP USD, and our risk currency against safe haven pairs. On the higher time frames, it's still in overall bearish market structure, just having this more aggressive pullback here, coming to these last price sensitivity areas here that took us into these lows printed by sellers to potentially revisit. We're also breaking some intraday bullish market structure with potential to come revisit these low points as the US dollar's bearish and the Canadian dollar is bullish, being a risk currency. Another fundamental bullish factor for the Canadian dollar is, of course, crude oil still holding bullish market structure. So last week, if you guys remember the last market update webinar, I gave you guys some great sells on USDCAD. If you guys watched the last Monday market update or the last Wednesday scalping session for sells below 1.258 key level. Now, I'm still looking to continue sells on USDCAD with potential sells in this current area around 1.254 if we get a daily candle double top, and further sells below 1.25. I would only be looking for, even if we come up and do a deeper retest to the bottom of this order block again for at 1.258, I would still be looking for sells. USD CAD is known for doing some aggressive pullbacks and profit taking moves, so it wouldn't be out of the ordinary to see that bit of a deeper pullback. Even though it might break this visual trend line, it would still be very bearish in overall market structure. So as long as crude oil continues bullish, where it's sitting at roughly $65 a barrel, again, if you guys followed the crude oil breakdown here from 2 weeks ago, you would have already been in oil buys, potentially swing trading those buys from the $60 price point, as we call those oil buys. But anyways, oil still bullish. It's still sitting at $65 a barrel. This is a fundamental bullish factor for the Canadian dollar, and we know the dollar index is still bearish. So USD CAD is moving inverse compared to GU, EURUSD, or GBPJPY as we're playing that dollar weakness. So again, this is what I'm looking for, with the red boxes being sell areas based on price action on the lower time frame, with the safest sells being below 1.25. The only thing you have to be cautious about is with the Canadian dollar impact. We do have the Bank of Canada interest rate midweek as well, but this is still some intraday analysis that can potentially play out over the next couple of days. Okay. Last but not least, we have the US stock market, which is extremely bullish across all time frames, and we're just consolidating at the all-time highs printed. With the flooding of US dollars and injections into the stock market by the Federal Reserve, as well as continued asset purchases, we can see that from the market crash, the 1%ers in Wales have gotten from their price points and have been extending their wealth to the upside since, with only having upside move, pullback phases and continuations up, or consolidation zones and breakouts to the upside. Now, what I'm trying to identify with this consolidation zone is we can have two things happen. For example, look at this consolidation zone here at the high, but then also look at this one and these ones here, okay? We're going to have either two things happen, and what we're going to do is identify the consolidation zone. That's what we just did. You're either going to have a break to the downside of the consolidation zone, creating a dip, retesting a previous demand area, and then continuing back up bulls, right? Or you're going to have a break out to the upside of the consolidation zone and continued buys. So pretty much what I'm trying to tell you guys to identify is, do not trade this consolidation zone. Wait for one or the other. Most likely, if we break below the consolidation zone, we're going to have a dip coming to probably 34,500 area, even 34K flat. If we do have that take place, at this, I would not sell the US stock market. I do not take any US stock market sells. There's no point fighting the Federal Reserve. It's much easier to let the dip happen and ride the dip back up. So either we're going to let the technical break below the consolidation zone happen, and then we can identify a deeper pullback's going to happen because there was enough order flow at those highs to continue us to the upside. If we break below there, let the pullback happen, and then try to look for, based on market structure, either at this previous low or this previous low, potential intraday supports being created and riding buys right back up, right? Or wait for the break and retest above the consolidation zone. Now, I'm going to show you guys this based on the intraday structure here. So pretty much you can see this is the consolidation zone. Very easy to identify from roughly 35,500 to 35,200. Don't touch this. Don't trade this. Don't waste your breath. Don't stress out. Let it make its decision and move. And what I mean by that is we're either going to have two things happen. Because you don't want to start anticipating the break and retest too early or the continued upside without actually having those confirms. For example, you had your consolidation zone here, and then you had the break back to the upside, right? So now, we don't have those confirms just yet. We can either break below 35,200 and start watching price action in these areas, and then jumping back in buys with the stock market buyers back up to these trends. Or wait for the break and retest above 35,550. All right. Okay, everybody. So just to recap, from the start of our webinar, we went through some macro and micro fundamental points that are active, as well as how it is impacting the overall financial markets and market sentiment. We went through our economic events. We went through market sentiment and investor behavior, looking at our stock market movement, our price action and movement on the volatility index, Japanese yen and dollar. We did higher time frame and intraday analysis on gold, GJ, GBPUSD, EURUSD, USDCAD, as well as US30, giving trade ideas across the board with exact price points of entries I'm looking for with reasoning why. Please make sure you guys also do some more work for yourself, because the majority of the YouTube community is very lazy as fuck and has no clue what's going on in the markets. They have no clue what's going on. They're just hyenas. So remember, you have all of these capital hungry resources at your fingertips. All of these various educational webinars, live trading streams, psychology webinars that can teach you about scalping, intraday trading, fundamentals and technicals. You also have the Capital Hungry News Twitter here, which posts headlines throughout the day. Other sources such as Forex Live and Forex Factory source from the Capital Hungry News Twitter. It's not as many news headlines as the newsroom, but it's still a lot. And you have the free Capital Hungry Telegram analysis channel. If you want more direct training, make sure you join the Capital Hungry private channel. Within the Capital Hungry private channel, you get access to the news terminal and newsroom, which is exactly like a Reuters icon. You get access to the trade room, where you get access to price monitors, key level price alerts, other members analysis, trade ideas, market update webinars, psychology sessions, and more. You get access to 50 plus educational webinars, daily live trading streams, daily market update webinars, and everything. I'm not on Instagram. Okay, so if you want more, if you want to really get an edge within the financial trading markets, go to the capitalhungry.com website and check out trying out the channel for the month. It's only $3 a day or $110 for the month. You get access to economic news terminal. You get access to price alerts, price monitor. You get access to daily market update and trade ideas across pairs. Even other pairs and stuff. Like we just did another crude oil analysis like 20 minutes ago in the private channel. You know what I mean? You get access to 50 plus educational webinars that'll teach you everything that I know fundamentally, technically, and from a psychology perspective. You get access to the community and so much more. I'm just going to plug that quick here so you guys really understand how much value you're getting within the month. Trade ideas given across currencies and different trade styles. We do a weekly Sunday market recap webinar, weekly technical and fundamental analysis, weekly data reports. So let me show you guys here at the start of the week what we did in Capital Hungry private channel. This is the start of the week. First, we go through our psychology webinars. No, $110 is the full price, not for the trial. That's just the regular price. First, you do your psychology webinars and you get your trading rules and reminders at the start of every week. Then you get your reminder to journal. I send you a weekend news briefing report of any headlines that came over the weekend. You also we do a weekly recap and refresher webinar that can run 20 to 30 minutes long. Then you get sent a weekly economic events report that tells you everything that's going to be going on fundamentally throughout the week. I also audio send an audio version of that. A weekly political events report as well. Then we do our key fundamental points that are active. A market sentiment analysis, and then a trade ideas webinar. So every Sunday we go through the same weekly flow with the psychology reminders, data reports, market updates, and so forth, which you can see here every single Sunday. This is all every single Sunday, every single week. Then we do 5 market updates a week and trade ideas every Asian session, and we do 5 scalping New York trading sessions every single day. You get access to the educational webinars on fundamentals and technicals. You get access to 600 plus webinars that are saved in the Capital Hungry channel. You get access to the community of other traders, all of the history within the channel, the newsrooms, both crypto newsroom and mainstream newsroom, and the trade ideas plus everything else given. If you guys enjoy the value, the value given from the free streams, as well as these types of analysis webinars, then you're going to get 10 times more value out of the private channel. But I don't mean to plug that in randomly. I don't want to be like a marketing asshole here. I just wanted to advertise that quickly at the end of this webinar. That's it. I'll see you guys on Wednesday, 7 a.m. Eastern. This is the YouTube schedule here. So every Monday, 7 p.m. Eastern is this Monday Market Update webinar. It'll usually be 30 minutes to an hour long, depending how much shit I got to talk about and what's going on in the markets, right? Wednesday, 7 a.m. Eastern is when I'll see you guys next, is our New York scalping session. And then Friday, a self-development live video. Make sure you guys follow all the free Capital Hungry resources in the description, as well as the links I just shown you guys, and join the channels. And then if you want more, make sure you guys join the Capital Hungry channel and use all these resources at your fingertips. I will see you guys later. I don't want to make these too long. Analysis was given across pairs, fundamentals and technicals. I appreciate your support. Thank you for watching, and I'll see you guys Wednesday morning.